All right, welcome back. Today we're going to do something a bit different. I've been watching some YouTube videos, so just like you're watching this one, I've been watching other people's. Today we are going to take a look at 3 days of data, basically Wednesday, Thursday, Friday, which may or may not be the best 3 days. I probably need to have way more than 3 days of data. But it took a while to actually go through this by hand and put it all in. So this is where I'm going to start. And essentially, I am testing a continuation strategy. So that strategy is essentially, I'll kind of explain what's going on. And I'll link the video that I got that strategy from in the comments for this video. And I believe the guy's name is Robert Anderson or Bob Anderson. I'm not sure which he goes by. Take a look at his channel if you want. But basically the continuation strategy is you are looking, this red line right here is basically the same as the red line down here. This top chart's a 1 minute chart. The bottom chart's a 5 minute chart. We don't actually need the bottom chart. So for the most part, we're just going to be focused up here on this top chart. I'm going to squish that bottom chart entirely. The red line here is basically a 105 minute moving average. So basically on the red chart, it's a 21 simple moving average. And so here, because we want it to be times 5 to represent that same red line, but on a 1 minute chart, it's 105 minutes. So, 105 periods. So 105 minutes on the red chart, it's 21 periods. So times 5 for the minute. Single minute chart gets us to 105. So this red line is basically our key. Whenever our price action is above that line and we hit our kind of signal, we're going to go long. When it's below, we're going to go short. So that's the significance of the red line. The yellow line is just a 9 period exponential moving average, which a lot of people use for a lot of things. So this is not anything new there. If you don't know what that's about, just go ahead and look it up. And then I have a pivot, and I couldn't find one that I really liked at this point, but this is the one I'm using. It seems to be the closest. So these green dotted lines right here and the red dotted lines, this is a higher high, a lower high, a higher high. And I couldn't quite get it to be quite like I wanted, but this is close enough for the purpose of this, and we can just scale back and look. So essentially what we're looking for, let me find a really clean example. So let's pretend for a minute there wasn't a news event right here. Let me just zoom in a bit. So this was a big news event. I actually took a trade that actually looks pretty much like from here to here. And I shared that in my last video. This one, basically, we're looking for a high to be broken. So currently this green line was the high of the day. So this is all on the same day. This was the next high, and clearly we broke that level right here. So once we break that level, what we're looking for is essentially a retraction back to the yellow line. So we broke the high right here. What we're then looking for is a retraction that looks fairly smooth, so kind of a nice level or kind of decline. So basically a pullback, right, is essentially what we're looking for, that basically comes back and touches that yellow line. And so as you can see right here, we break that previous high of day, we retract, and we touch the yellow line. And then the strategy basically goes like this. You're going to set your entry point 1 tick higher than wherever this candle wick is. So that's where my arrow starts. And we're going to basically have and I modified this for on accident, actually, for the data that I put in. We're going to have a 6 tick stop and a 20 tick profit target. So 5 points up is what we're looking for. And if we hit 1.5 points down, we're going to stop out. So obviously, if you were to take 5 and divide it by 1.5, you'd see this is a 3 1/3 to 1 risk to reward ratio. So if we basically win one of those every 4 trades, we will still be ahead, because we'd lose 1.5, we'd lose 1.5, we'd lose 1.5. That's down 4.5. We win the next one, we win 5. 5 minus 4.5 is simply a half. So basically we need to win about 1 in every 4 to basically be above break even, because of course there's commission, so it depends on how many contracts you're trading and whether you're trading the micro or the mini. But this is the strategy. So essentially we break a higher high, and I'm going to go through kind of analyzing. I'm going to do the analysis live because I put everything in, but I've not gone back and looked at it. So you're going to get Brian's first take on it. Basically break a higher high or a lower low or some form of kind of barrier there. And then we're looking for that retraction, and then we're either putting in a long if we're above this red line, or if we're below that red line, which you'll see back here, we'd put in a short. So that is the basic strategy, and I've watched a couple videos from this other guy who was great. I love his passion, and he's been using it. And seems like he's having success, and other people are having success with it as well. And it seems very simple to at least understand. However, when I tried to actually go through and decide, is this actually, a right spot where I would enter a trade, it was a little bit more difficult because I wasn't 100% clear on some of the rules. So this is why I'm going to do the analysis across 3 days. And if I like what I see, I'll probably go back and do it on some other days, maybe in some different periods. But I'm probably going to try testing it out on Tuesday, regardless of what I find, unless it just totally looks like it's crap. So, and I kind of have a doubt that it's not going to look like that because the risk to reward is pretty good. So the other thing that he mentioned was that if he does hit I believe 3 point, if it moves up 3 points, he will pull the stop loss to break even. Maybe it was not 3 points, maybe it was 1.5. Let me just double check that really quick. Yeah, so it's just 1.5 points is basically what, when you are profiting 1.5 points, it pulls the stop loss to break even. So I also did not look at that when I went through this data. And his original was not a 6-point stop loss, but or a 6-tick stop loss. It was just a 5-tick. And this is obviously on the ES. The NASDAQ, it would be a whole different story. You'd need to figure out kind of a different point scheme because the points move much quicker on the NASDAQ because it's a much higher price. So it's a much smaller percentage when the points move 5 points, which happens almost in every candle on the NASDAQ if you're watching it. So here is our start of day of trading right here. And basically the other piece of advice that he gave, and I've heard from multiple places, is just I'm just not trading during the first 10 or 15 minutes. So I kind of just ignored until, and for me, I'm in mountain time, so I basically ignored until here. And there was really nothing that went on in here. We had the high of day, which is this green line, basically right after the open, kind of ran up into it, and then pulled back, and then came up, got a lower high, pulled back, got a higher high. We didn't really break that high. And so, if you were going to trade inside here, one could argue, well, we were coming down, so we're not breaking anything, and we're above the red line, so we're only looking for longs anyway. So pretty much this whole down trip, you're pretty much, because we've not broken a high yet. So we come back up, we set this high. You could probably argue that, hey, we broke this high, and then we started to pull back. Well, the way it works is this one touched the yellow line, and it's the same. It's right on the same candle. So technically, you would set your buy target here, but when the next candle goes there, you would drop it to here, and the next candle slightly lower and slightly lower and slightly lower and slightly lower and slightly lower, and now we're approaching that red line. So to me, that kind of invalidated the trade. You can see 1, 2, 3, 4, 5, 6, 7 red candles in a row. We're fully below the yellow line, and we're basically tagging the red line, which would mean we're right at the kind of crossover point where it would be a short and not a long. So I invalidated this trade. However, if you, for whatever reason, did not invalidate the trade, you would have come all the way down to here, and you probably would have gotten in, and let's just put it in. So maybe I missed one, 39.56, so we'd put it in at 39.57. So basically, when it comes back above here, we would hope for 5 points up, but as you can see in this next candle, we definitely would have stopped out. So this would have come up, come over, and probably at some point during this candle, it went down. So we would have stopped out here. So I have a theory that when we're really close to the red line, and I will even just leave this in here, 39.55.5. Let me go ahead and just add a comment. Probably never taking this trade as it's almost on the red line, but would have stopped out. Minus 1.5 points. Just in case, for completeness. So there we go. So basically what happens here is, and I'm going to kind of go through this really quick, and then I'm going to come back and I'm probably going to pull some of these out because I think there's a few tweaks or rules that I would want to add based on what I'm seeing, this being one of them. So here we came back down, we hit a high, we came down, and we broke a higher low. And so I don't know that that's actually part of the strategy. Like, we came back above this, but that doesn't seem like it's right. I think we need to be breaking, like, come to this lower high and then break above it. That seems like it would be a better option. So I kind of think that's probably not going to work. That's probably not going to work. But I'm just going to leave it the way that I put it in. So this one comes down, and now we would be shorting, right? This is obviously a loss. This would be, that arrow should not be. So we would have gone long. Let's see what we're doing here. Oh, yes, this is the one where we came all the way down to here, and we were hoping it would go up. And then this one, why did I put this one in? Broke a higher low. So we came up past a higher low, retracted, basically to where it touched the yellow line on the next candle. And then we would have longed that, but we would have actually stopped out right here. So that arrow is just wrong. All right, so we've got one wrong, one bad trade, two bad trades, three bad trades just to start it off. And then broke a lower high again. So again, I'm not sure that that's right, but you know, you can see. So we've got 1, 2, 3, 4 that we've lost. We then win 1, 2 in a row, and then we lose another one. But it's not a smooth retraction, so I don't know that I would have chosen to trade that. So, but we're going to count all of them that I put in here just to try it out. So 1, 2, 3, 4, 5 losses right here. I'm just going to grab a piece of paper and write this down. So we've got 5 losses and 2 wins so far. And that takes us up to this point. This was a news event. This actually would have worked, but I would not trade near news events, so I'm just going to ignore that one completely. Broke a lower high. This one is plus 5 points, so we have another win. And then we have, if you count this one, if you were in the trade and you took another one here, basically you get out, for that's a loss, and then this one would be a loss. So we have 3 more losses right there. And no clean retraction after the close. So this was very choppy to me to get into the close. And this was at the very end of the day, so probably not a great thing to get into. Here's a win. Here was a stopped out. But the question I have is, gosh, are the, you know, is it even valid? The bars are so far above the yellow line. Does that make it not? And we tagged the red line. So not sure, but we have a win and a loss, if it is indeed that. So let me check those bars. And then we don't have anything in here until we get out here. Basically broke, stopped out, said there's a loss. So we have another loss, a win. And then basically it looks like we didn't really break. I mean, we broke the high by like a quarter point right here. So it seems like that's probably not very worth it. So I probably would ignore those trades. And then we broke the higher high and we lost again. So we have a loss on there. And then we lose here. We lose here. So there's 3, 4. So there's 4 more losses. And then I have a couple in here, not a smooth retraction, close to the red line, candle fully below. Does that make it invalid? I mean, we're below the red line pretty much. Broke the higher low. Basically, that's invalid. So here we have another loss. So 1, 2 losses, and then a win. So far, it's looking like it's going to be very close. This was the end of the next day. This was a huge news event in here, so not trading that. Then we had a loss, no smooth retraction. So we got 1 loss, 2 loss, 3 loss. So it's not sounding very good, right? 1 more loss, 2 more losses. So 2 more losses, and then we've got 2 wins right here, and that ends our story. So if I add all those up, basically, what do we have? We have 8 wins and 22 losses. So let's just do some quick math. 22 losses times 1.5, that is 33 points down. And obviously, if we did the 8 wins times 5 points, it's 40 points. So even with some of the craziness, that is still a 7 point across 3 days, right? And if you're trading the mini, then each one of those points is worth 50. So across 3 days, right, you're going to have made $116. But I really don't think that I would trade all of those. And so that's really what I want to kind of go back and look at. And I know it's hard because it's like, oh, it's hindsight. Are you being honest? But I really want to kind of define the strategy a little bit more clearly for myself. I'm sure that Mr. Anderson has defined it very well for himself because he seems to be doing awesome with it. But if we have a trade and it touches the red line, it just seems like you should ignore that every time, right? So I'm probably just going to go ahead and take this trade and delete it. So this is a copy, so I still have all the original data. And this is the start of the day. So we broke a higher low. I honestly don't even know why I had this in here. Like, we haven't come up and broken, like maybe if we broke this lower high, I would be more stoked about this. Or if we set a high first and then we broke it after the downtrend. But breaking a higher low, I'm kind of curious why I even put that in there. So I'm going to take those 2 out. And I'm just going to mark what I delete so I don't have to go back and add it up again. So that's 2 of the losses deleted. So this one, again, we came all the way down, and now we're not breaking any new highs. We're not breaking this lower high. We're just really not breaking anything. Like, this seems like a really good place to take a long trade, and maybe that's a different strategy. But for this, like, we haven't come back up and broken any high. So that one does not seem like it actually meets the strategy. Here we actually come above and we break this. And so I'm going to leave this in here. We broke a lower high, but we did touch the red line. And so I'm going to leave these for now. I'm just going to kind of look and see, are we actually breaking, higher highs, or at least a lower high from previous. So this one we definitely broke through this high. This one we definitely broke through this high. And then here, let's open this and make it much easier to see. So here we broke the high of day. So we came to here, we came to this high, broke through the high of the day. But then this is not a very smooth retraction, right? So we get this like down, up, back, 2 doji candles in a row, and then finally the down into this. And this almost made it back to the same high. So this kind of retraction doesn't look very smooth. And so maybe that's a hint, right? Like, it's trying to push up more and it's getting a lot, got some tall wicks on the top of these candles. So, we did break the higher high, but the retraction, like during our retraction, we went higher than that. So maybe what it needs to be is during that retraction, if we go higher, we wait for the next retraction back, which still would have been right here, and we still would have stopped out, but just barely, right? Like here we got in at 39.68.75, and we stopped out at 39.67.25, but it only went a quarter point lower. So had our stop been 2 points, if you want to do a 5-to-2 ratio, then this trade would win. But I'm not going to play with stuff like that to try and hindsight it. So we will leave this one in here because that part of the retraction is there. I'm going to put broke, high of day, then broke again, still stopped out. I do believe that's a smooth retraction now after looking at it again because we broke it here and we came straight back and touched the line. So I think that's perfectly fine. So next one up, keep going. Broke high of day, also news event here. So we're just going to pop this one off the chart. And then, so here we broke a lower high. So we made a high, came down, came back up and broke that, and then waited for the retraction back to here. So we kind of break through the high. I suppose you could argue that it would even be here. We came up to here, broke through it. This did. It is very hard to tell if that touched the line. It looks... Man, I think it's right above the line. So right above the line. But if you would have, just out of curiosity, if you would have gotten in here, we basically would have been at, so that was 39.73.75. And would we have dropped a 1.5 lower? The answer is yes, exactly. So if we got in here, we would have gotten stopped out here. So just for the sake of having everything be as complete as possible, barely stopped out after breaking above the lower high, minus 1.5 points. I'm going to have to go back through and add these up again anyway. So that's fine. And then we still would have broken that high again. We would have had a smooth retraction back to the yellow line right here. So this one was, you can hardly see it with my text there. Basically, we would have put our entry here. This candle would have dropped. This candle would have come up and we would have entered right here. As you can see, we don't go below. So that one is valid. And then you watch, and of course, we come up and we basically set. You got to kind of come back here a little bit. We do break through this higher high right here. And so then pretty much we're watching for a retraction after this. So we're up here, we retract to here, and unfortunately from here up to here, let me see what it was. This was 77.50, and that was 87.5. So it wasn't quite enough to get us there, but it probably is one where 3 points gives us a pull to our break-even stop, and so we don't end up losing. We just get stopped out for a break-even. Which I probably should be watching as I'm going through. So maybe I'll go back and do that again. And then we start coming down, and you could say, well, we broke through this high. We came up to here. We retracted, and we retracted to here. We got in, and we stopped out. This is broke the high of day and retracted. So we broke through this. We hit here, and we retracted down to right here where we touched the yellow line. So we would have gotten in for a long, but we would have shorted out or stopped out. And then this is broke the previous higher low. So here was our previous higher low. So I was looking at that saying, okay, well, what would we do? It's prior to market open, but heavy volume due to huge news. So we can just probably pull that. I don't even see where I didn't put an arrow in for this one. Basically, this retracts. We drop through this higher low that came from right here. And I don't know that that's even valid. So we're also very near the red line. But basically, you would have come down, put your stop here, put your buy stop here, put it here. And you technically haven't broken that yet. So it would have been down here. You would have gotten in here. And for sure, you would have nailed that. But this was also a heavy news event day. So I'm just going to go ahead and remove that because I don't think that would have been a great trade, even though I actually did trade a trade from about here up to about here in real life. So let's see what else we have. Scroll down. So again, it's weird because it's like, do these count? You're not breaking the low of the day. You're just simply, this was end of day. Next morning in the market, I don't even know where my, oh, that was my comment from last time. Did it just get moved? Nope. I am not sure where my comment went on this, but essentially we had a higher high, and then you would have come down to here, and you would have gotten in basically here, and of course you are now below the red line, so you would have not had anything there. I think that arrow was just supposed to point to right here. I'm not sure why it was down so low. Maybe it's because I'm messing with the scaling and it's not keeping it in place. So this one, basically it's invalid. My question is, it's invalid since it's fully above the yellow line. So like we're coming way above the yellow line, but that also to me says, well, the market's got some oomph, it's pushing up. So maybe it's about to run into some resistance and pull back down. I don't know. Here's one where we broke a higher high, seems legit, broke a higher high. And then we have these where it's just the higher high is the same. So we're kind of waiting for the push through. And even this, like the difference between this higher high, which is at 1575, and this one is 1750, like that one might be okay. But like from 1450 to 1525, like, and then to 16, probably those three just are the same, and maybe even all four are the same. But I counted one in here, you know, broke the higher high, and then started retracting. We got in, we took the loss. And here broke the higher low. So again, I don't know if this counts, right? We went down to the low, we came back, we broke this higher low, but it seems like these aren't really going to count. Like you can clearly see the trend is moving up, you know, but, you know, is the pullback coming? So I don't know what higher low we're really breaking here other than, hey, we broke this one from way back when. This doesn't seem like it's a valid trade to me. Like we need to have, you know, broken a higher high, and we're below this. So we're still looking to short. So we need to be kind of moving down, which we did. Oh, so we broke this higher low, this higher low, this higher low, and this higher low on the way down. We did retract. So that does in theory make sense. But if you look at where the lowest lows are, we did not make it down there. So I don't know if that's supposed to be valid according to this trade plan, or if you just always have to break a high of day or a low of day. Here we broke the high of day. Here the candle fully below the gold line. So a bunch of kind of just different things where, you know, it doesn't really seem like some of these are great trades. So I'm going to pause the video and kind of go back through and pull a couple more out, check out the kind of stop loss, trailing stop loss, so that if we did hit 3 points, they'd be break even. And I'll come back on and walk you through kind of what I have left. But I at least wanted to start there so you could see kind of where the starting point was. But I don't want to spend, you know, another 15 minutes going through all of these. So I'll be back in a few minutes, and which will be basically 1 second for you guys. And then we'll see what the end result actually looks like for these particular 3 days of data, which is obviously not a statistically meaningful test, but it is a start to kind of get some feel for how would I trade it and what would I ignore. So I'll be right back and we can go through it. All right, I'm back. That took a lot longer than I was thinking it might, but I was very kind of ruthless in making sure that if I did one thing, I did it consistently all the way through. So you'll notice like right here, I added a couple trades that basically we broke the high by just a little, and you know, we broke a previous higher high here, we broke even, we broke it slightly again, retracted, got in here, stopped out, broke it by, you know, a point and stopped out. So I kind of tried to make it almost as bad as I could, and I haven't tallied up the results other than going through and typing them in. So here's what I came up with. Basically, one rule for sure: if the candle closes fully below the red line, there's no trade. So that is fine. And then it seems, this is my hypothesis when I wrote the sentence at 2 and 3, it seems to me that breaking a higher high on the way up or a lower low on the way down would be better. And then breaking a lower high, right? So you come up and you break a lower high. Like if you're breaking this lower high on the way up, it's probably not as good. Whereas, in breaking a higher high, you've already been there and now you're going higher, or a higher low. So if it's, you came down a little bit in the chart and then you went back up and then you came back down, you're breaking a higher low. That's probably more risky. That was my hypothesis. I typed those before I tallied everything up. So as you can see, basically wins were over a higher high. Basically, we broke a higher high, we broke a higher high, we broke a higher high, we broke a higher high. This is actually the same higher high as it was before, so I counted that, and another higher high. And then we had 1, 2, 3, 4, 5, 6, 7 break even on higher highs. And then we had 1, 2, 3, and then we had 3 more. If you remember, all 3 of those really close higher highs, I counted all of those as losses, just to make this kind of as ruthless as possible and see, does the strategy actually hold up if you trade it the way I interpreted it. So you can kind of see 1, 2, 3, there's 6, 7, 8, 9, 10. So these 3 and these 2 were really close. So we had 10 losses for there. Let me just take notes here. Win, break even, and loss. So from the first set, what do we have? 1, 2, 3, 4, 5 wins. 1, 2, 3, 4, 5, 6, 7 break even. And what did I say? 10. There's 3, 6, 7, 8, 9, 10 losses. And then from the second side, this did not seem good at all. So win, we had a lower high and then a higher low on the short side. So we had 2 wins. Not great. We had 1, 2, 3, 4 break evens. And then we had 1, 2, 3, 4, 5, 6, 7 losses. So that gives us a total of 7, 11, and 17. So 17 losses at a 1.5. That's going to be minus 25.5 points. Obviously, our break evens, we had 11 of them. So there's 11 extra commissions that we'll kind of talk about later. And then on 7, we basically had 5 points because we had 7 total wins. So that's 35. So basically, we had 9.5 points of, how did I get that? Was it 22.5? No, 25.5. So we had 9.5 points of profit. So, and obviously at $50 a point, if you're trading mini contracts, that's $475 across 3 days. So overall, it seems like it would work. And I think if you eliminated a few things, clearly the higher highs are doing better. But I think the higher highs where they're all very close, maybe you ignore those, right? Because if we come back and look, we've got a break even here, then we stopped out, and then we stopped out. And this higher high, previously this one was legit, but then this higher high, that's also probably legit. But this one is only about 1.5 points above the previous higher high. So very kind of difficult, right? And then this higher high is 0.75 points above the previous higher high. And then this is the same higher high. So, those are all right. And then back here, let's see. Where did we have all those similar higher highs? I think I might be back to the beginning. Yep. Let's see. So we came up. Here's the higher highs. So I basically added in, stopped out here. And, we obviously broke through the higher high and then the high of the day here, which was great. What then happened was this higher high was at 1450, 1475, and 16. So, if you eliminate unless the higher high moves a full 2 points above, I could go back through and kind of calculate what makes sense. But my guess is with a lot of those, these 3, maybe one of them still holds, and then, maybe one of these goes away. And at that point, anything you can do to kind of eliminate your losses definitely helps. The other thing that's interesting in here is that the losses on the short side are basically really bad. So we only had one win on the short side, and the two lower lows seem great, but the higher lows, breaking a higher low on the short, that just seems like an instant elimination based on this very small, non-statistically meaningful set of data. Is probably don't trade when it breaks a higher low. And like an example of that is here, like if we count this as breaking this higher low, if we drop down and we count that as breaking a higher low there, that's not how this particular one was counted. But that's just, it actually was, sorry. So this is breaking that higher low. We don't actually break the low of the day. We do actually break other lower lows. Actually, I take that back. We only break higher lows. So pretty much anything where we break higher lows, I'm probably going to rule that out of my trading for this particular strategy. And that would cut out 1, 2, 3, 4, 4. So, I mean, given that, we'd be down to 13 losses in this particular strategy, times 1.5. And then we had 35 winning points. So that would be 15.5 points, times 5. So, I'm going to make it positive now. 15.5 times 50. So that's $775 across 3 days, $258 a day. That would certainly, if you were trying to, pass a trading combine for a funded trading site, if you just stuck with that strategy and you made $250 a day, it may take you 12 days to get to your $3,000 for a 50K funded account, but you would still probably be able to do that. So that is kind of what I went through and what I have. Just wanted to share that. I'm going to try that out probably this week, and I will let you know how it goes. My ultimate goal is to find a strategy that fits my personality, my style of trading, and then I'm probably going to take this particular strategy and look to combine it with some of my scalping strategies. So I've started using more scalping strategies on the NASDAQ, while I'm going to use this strategy on the ES. So it could be a very busy day on Tuesday. Markets are closed on Monday for MLK Day. So that is what I have. And I'm also probably going to combine this particular strategy with supply and demand. So if we're coming into a supply zone on the high side, like for example, I happen to know there was a supply zone basically I think at 4,019 was the supply zone. So if we're coming into that and it looks like we're rejecting it like once, twice, 3 times, probably not going to put those. I might put this first one in, but I'm not probably going to put the next ones in until it's pretty clear that we're going to break through that supply zone. Same would hold true on the demand zone side. So I think the combination of knowing both of those things will be greatly helpful. But that's all I have for today. I hope you enjoyed this video. If you did, please hit the like button and subscribe. And I will be doing more of these in the future. Thanks for watching and have a great day. Bye for now.